Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot. But before we go into any details and talk about the income pick today, I want to let you know that anything you hear in this video is for information and educational purposes only. Investing comes with a lot of risk. No matter how safe an investment sounds, there are risks involved. To read more about it, please see the description below. And if you want to read more about what John writes on a regular basis, you could head directly to incomeinvestors.com. While you're there and browsing the website, you could also sign up for some free reports that we offer, and these reports get delivered to your inbox. Industry tailwinds are nice to see, which is what makes VICI Properties Inc., traded on New York Stock Exchange under symbol VICI, such a compelling stock now. One of the largest experiential real estate investment trusts, or REITs for short, that also happens to own three of the most iconic casinos in Las Vegas. The US gaming industry is on fire. In 2022, Americans gambled a record-breaking $60.4 billion. This marked the first $60 billion a year for commercial gambling sector, surpassing the previous record of $53 billion set in 2021. And by all accounts, 2023 could be a record year. Again, this bodes well for VICI Properties and its experiential portfolio. John?
Thanks, Mo. As you already noted, VICI Properties Inc. is one of the largest owners of gaming, hospitality, and entertainment destinations in North America. As of this recording, the company's national footprint includes 92 experiential assets, and this consists of 54 gaming properties and 38 non-gaming experiential properties across the US and Canada. The portfolio includes approximately 125 million square feet. Put that in context, that's the size of roughly 2,170 NFL fields, and features roughly 60,300 hotel rooms and approximately 500 restaurants, bars, nightclubs, and sportbooks. Its properties are occupied by industry-leading gaming, leisure, and hospitality operators under long-term triple lease agreements. VICI Properties has a growing array of real estate and financial partnerships with leading non-experiential operators too, and this includes Great Wolf Resorts, Canyon Ranch, and Chelsea Piers. VICI Properties also owns 4 championship golf courses and 33 acres of undeveloped and underdeveloped land adjacent to the Las Vegas Strip. It's always in the process of growing its portfolio. This past October, it expanded its non-gaming portfolio with the roughly $433 million acquisition of 38 bowling entertainment centers from Bolero Corp. With the acquisition, VICI entered into a triple net master lease agreement with Bolero with an initial total rent of $31.6 million and an annual term of 25 years. Now, this also comes with 6 5-year tenant renewal options. As for, what every good landlord does, it increases its rent. Rent under the lease will escalate at the greater of 2% of CPI, to a ceiling of 2.5%.
And John, I was reading that VICI Properties' third quarter earnings jumped 68% and it raised its 2023 guidance.
Yeah, you can't beat the house, Mo. VICI Properties has the numbers to back it up too. For the third quarter ended September 30th, 2023, VICI announced that total revenue jumped 20.3% year over year to $90.3 million. Net income was up 68% at $556.3 million or 55 cents per share. Funds from operation advanced 63% to $556 million and change, or 55 cents per share. Meanwhile, adjusted funds from operation increased 5% to $547.6 million. And on a share basis, it actually rallied at 10.7% to 54 cents per share. Now, going forward, strong financial results forced management to increase its AFFO guidance for full year 2023 to between $2.17 billion and $2.18 billion, or between $2.14 and I think $2.15 per share.
And VICI Properties increased its quarterly dividend payout by 6.4%.
Yeah, strong FFO growth, which drives dividends, is growing, and that's been great for dividend hogs. In early September, VICI's board declared a regular cash dividend of 0.415 cents per share, or $1.66 per share on an annualized basis, for a yield of 6.07%. Now, this represents as you said, 6.4% increase over the 39 cents per share paid out in the previous quarter. 0.415 per quarter payout is also well above the company's third quarter FFO of 0.55 per share, which just goes to show that the high yield dividend payout is safe, and there's every reason to expect the company would raise it over the coming quarters.
And if we listen to conservative Wall Street estimates, VICI Properties stock has an upside of 59%.
It's kind of a double-edged sword right there. Despite posting strong revenue, earnings, FFO, and adjusted funds from operation growth all year long, VICI stock is not exactly following the same trajectory. As of this recording, VICI shares are actually down roughly 9% year to date and 7% year over year. Now, currently trading near its lowest level since October 2022, the sell-off has simply put VICI Properties in a more interesting trading range. Even the company's board agrees, with various directors having bought almost 37,000 shares so far this year. In fact, there's been no insider sales in 2023. The Wall Street is also in agreement with this bullish sentiment, with analysts providing a 12-month share price target range of $36 to $43 per share.
John, thank you so much for the insight. Just to recap, VICI Properties only went public in 2018, but over that short period of time, it has weathered the worst economic storm in 100 years. Since then, it has become a top REIT in RMZ REIT Index, a member of the S&P 500, an investment grade issuer of credit. It is also the second largest triple net lease REIT with $2.9 billion in annualized cash rent and 100% of rent collection since its formation. Thanks to contractual escalation, it's protected against inflation. This includes 50% of rent rolls with CPI-linked escalation in 2023 and a 96% of rent roll with CPI-linked escalation over the long term. On top of that, 80% of its rent comes from SEC reporting operations. This provides transparency in the health and performance of its tenants. And its tenants are doing quite well. This helps explain the strong revenue, earnings, FFO, and AFFO growth it has been reporting. Going forward, management believes that the momentum will continue in 2024, which should help juice its undervalued share price and reliable growing high-yield dividend. That's it for today. We'll be back with another video soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.